This is Mark Espy with MarketTamer.com. Welcome once again. We're taking a look at the SPX, the Standard & Poor's 500 Index. Must remind everybody once again that everything we speak about is for educational purposes only and never to be construed as a recommendation to buy or sell anything. Please do your own due diligence. We had another holiday shortened week. We began on Tuesday with a high wave doji, and we put in what the Japanese candlestick call a Marubozu candle, which has no wick to the upside or the downside. It was a big trading day up, a follow-through day on Thursday with a narrower range, and then a similar day today closing out the week. We bounced off of 1,010, 1,011 in that neighborhood. Also interesting to note that we have a Fibonacci retracement level, 38.2% at that level as well. So we were coming up here and moving up, and so the thought is, how far are we going to go? My speculation is that we are running out of gas. The market participation in terms of volume has decreased in all of the indexes. So I believe it's a reaction or a reflex rally up to this point. Now, if we do continue to the top side, the area that we would look at, well, currently at one right now, because there's a bit of a shelf right here, which is from late June as well as late January and early February, and it lines up with some market symmetry back here. There's a swing high at about 1130, and at that level there is also a Fibonacci level, a 50% retracement at 1121, so we need to pay attention to that as well. We have a swing high that occurs here just above 1170, and then we have the April 26th high right here at 1220. There's also a high from a swing high back here in January, and that is at 1150. The stochastics crossed over from the 20 and moved up very bullishly, and it looks like it's going to continue that way, so there is no indication right now that it's going to do anything except continue to move up into the overbought area. And we had a crossover of the MACD over the signal line and just beginning to poke its head on the other side of the zero line with the MACD histogram. So my best feel is that we are going to come back down, maybe begin to languish, go sideways, and then come back to retest this area here. From a support perspective, I already mentioned that 1011 to 1014 should be pretty good support, and then there's also some very good market symmetry and a 23.6% Fibonacci level at 880. That's significant lower, obviously, than where we are at right now, but we need to pay attention to that. And then we have the March lows at 666. Okay, with that, we're going to move over and take a look at the COMPQ.